In the fast-paced world of business, we often hear about gut feelings and, years of experience driving success. And while that invaluable intuition has always been, well, a bedrock, what if I told you that in today's landscape, it's simply not enough on its own anymore?
It's fascinating, actually. The modern business administrator, they need to speak a different language entirely to really thrive.
A different language.
Yeah, the language of data,
Huh.
of concrete analysis. Calculations aren't just for the back office or the finance specialists anymore.
Right.
They're the very core of strategic decision-making
Yeah.
in, like, every department.
Absolutely. And that's precisely what this deep dive is all about. It's kind of custom tailored to help you cut through the noise and navigate the world of business numbers with confidence. Our mission really is to equip you with the quantitative insights to truly evaluate financial health, make informed investment decisions, optimize processes, forecast trends, and, accurately measure performance.
And if we connect this to the bigger picture, mastering these calculations lets you transform raw company information. Turn it into truly actionable strategies. That ensures not just profitability, but sustainable, resilient growth. We're going to dive into everything from the fundamentals of financial math
Okay.
to the power of statistical analysis and, crucially, the tech tools that bring it all to life.
So let's start at the foundation then. Financial mathematics.
Right.
This is where it gets really interesting for anyone making those big picture decisions. It's all about understanding how money changes value over time, the time value of money.
Right.
This isn't just some academic theory. It directly impacts every single smart investment choice you might make.
Well, this raises a really important question.
Yeah.
When you're looking at a new venture or maybe even a personal financial decision,
Yeah.
how do you assess if it will truly pay off in the long run? That's where net present value, or NPV, is just crucial.
MPV, right?
Yeah. While the precise formula involves discounting future cash flows back, the core idea is pretty simple. NPV basically tells you if the value of a project's future earnings, when you bring them back to today's dollars, outweighs what you put in initially.
So a positive NPV means?
You're actually creating value. Simple as that.
And what makes NPV so powerful, I guess, is its ability to compare vastly different projects, right? Maybe they have different timelines or risk levels.
Exactly. It brings everything back to a common point present value. It forces a kind of disciplined way of thinking about true value creation.
Okay, that makes sense.
Precisely. And closely related is the internal rate of return, or IRR.
IRR. Heard that one a lot.
Yeah, you probably have. This is the discount rate, the specific rate where a project's NPV becomes exactly zero. It's often used to compare the profitability of different projects, gives you a percentage return figure.
So higher IRR is always better.
Well, not necessarily. It's important to remember that IRR, while useful, doesn't always tell the whole story. I mean, a project might have a really high IRR, but maybe it needs a massive initial investment, tying up too much capital. Or perhaps it's just exceptionally risky. Administrators really need to balance this raw profitability metric with other practical things like, capital availability and risk tolerance.
That's a great point about looking beyond just the surface numbers, because beyond those big investment decisions and the balance sheets, administrators need to get their hands dirty with the nitty-gritty of internal costs. Which brings us into managerial accounting, right? All about operational efficiency and smart cost management.
Think of these calculations as like vital signs for a business. Take the break-even point, for instance.
Okay, break even.
It's not just a number. It's a really critical planning tool. It tells you exactly how many units you need to sell just to cover all your costs and avoid making a loss. It's calculated by dividing your total fixed costs by your per unit profit margin. Understanding this gives you real clarity on exactly when you start making money.
And beyond that specific point, managerial accounting gives us a whole suite of financial ratios, doesn't it?
Oh, absolutely.
We're talking about things like profit margin, inventory turnover, the debt index, stuff like that.
And these aren't just abstract figures. They provide an instant sort of X-ray of a company's operational and financial health.
An X-ray. I like that.
Exactly. Take profit margin, for example.
Yeah.
It instantly tells you how much profit a company squeezes out of every single dollar of sales. That can reveal a lot about their pricing power or, their cost efficiency.
Right.
Then there's inventory turnover. That reveals how quickly a company is selling its goods. A high turnover often suggests efficient sales and, importantly, less money tied up in stock just sitting there.
Less cash locked up, yeah.
And the debt index, that provides a quick gauge of a company's financial leverage,
Right.
basically how much debt they're using and the associated risk. Knowing how to interpret these ratios offers incredibly powerful, quick insights. It's like having a superpower to assess efficiency and risk.
So we've talked about what's happening now, how to manage the present. But what if we could look beyond what's happened and start to, well, peek into what could happen? This is where statistics and data analysis come in, right? Moving us from just historical data to actually predicting future trends.
Yeah, and this isn't just about, crunching numbers for the sake of it. It's about anticipating market shifts, consumer demand, proactively preparing for the future. While descriptive statistics, things like mean and standard deviation, they help us understand how variables behave.
The basics.
The basics, yeah. But it's inferential statistics. Through analysis like regression and forecasting, that's where the true predictive power really shines.
Can you give an example?
Sure. An administrator could use, say, regression analysis to definitively see if their sales numbers actually correlate with their advertising spend.
Okay.
But finding that direct link allows for optimized marketing budgets. It turns that raw data into a kind of strategic compass, guiding future decisions.
A strategic compass.
Yeah.
Nice. Okay, if you've ever wanted to do more with less, or figure out the absolute best, most efficient way to do something, this next area, operations research, is probably for you. This whole discipline is squarely focused on maximizing efficiency, finding optimal solutions.
It really is about finding the best possible solution to complex problems, especially, when you have limited resources.
Yeah.
Which is always,
That's
right?
pretty much always.
Imagine being able to fine-tune every single aspect of a supply chain or a production line to achieve peak performance. Linear programming, for instance, that's a powerful technique used to allocate limited resources. It could be labor, raw materials, machine time, in a way that maximizes production or minimizes costs. It's how companies decide the most efficient mix of what to produce.
Okay.
Then you have inventory models. These aren't just about counting widgets on a shelf. They optimize stock levels to cut down storage costs, while, crucially, preventing those costly shortages when customers want something you don't have. These principles are what allow businesses to truly streamline their operations.
All this amazing analysis, this optimization, it sounds incredibly powerful, but how do we actually do it? Thankfully, we're not doing this with pen and paper anymore, are we? There are powerful tools at our fingertips that really bring these calculations to life.
That's right. And they're not just software. They're truly powerful enablers. Microsoft Excel, for example, is still incredibly indispensable here.
Still the case.
In many ways, yes. Its financial functions, pivot tables for summarizing data quickly, its robust data analysis capabilities.
Yeah.
It makes it a kind of Swiss Army knife for administrators. Mastering Excel transforms these abstract concepts into tangible, actionable insights.
Okay.
And then for centralizing vast amounts of information and automating complex calculations across the whole organization, you really need enterprise resource planning, or ERP software.
ERP systems.
ERP systems, yeah, along with well-designed databases, they are absolutely crucial. Knowing how to leverage these tools really enhances your value in, well, usually any professional setting.
So, okay, let's try and bring all these threads together from our deep dive today. What we've discussed really shows that calculations, they aren't just separate tasks you delegate, right? They are the very foundation of strategic leadership. When you master these skills, you're not just managing, you become a true strategist.
That's absolutely right. Dominating these quantitative skills allows you to evaluate risks and opportunities with real precision, allocate resources much more efficiently, identify those hidden areas for improvement or bottlenecks, and, critically, communicate complex company performance with clarity and conviction to all your stakeholders.
It sounds like we have a pretty robust toolkit then. But as you said earlier, the world keeps evolving, and so do the challenges facing administrators.
Indeed, they do. The sheer volume and velocity of data we're generating now, what people call big data, it demands new approaches, new tools beyond traditional spreadsheets.
Like what?
Like Power BI for visualization, making data understandable, and programming languages like Python and R for more advanced, complex analysis. We're also seeing increasing automation in business processes. That means administrators need to understand the logic behind the algorithms to effectively oversee and optimize these automated systems.
So you need to know how the black box works, basically.
To some extent, yes.
Yeah.
And perhaps most critically, we operate in what's known as the VUCA world.
VUCA.
Volatile, uncertain, complex, and ambiguous. It means the business landscape is constantly shifting, often unpredictably. There are interconnected challenges, unclear information. This environment isn't just a buzzword. It demands more sophisticated forecasting models, more scenario analysis, just to prepare for unexpected changes and navigate this deep uncertainty.
So the question for you, our listener, after all this is,
Even with all these incredible tools and sophisticated models at our disposal, the ultimate power still lies in the administrator's ability. The ability to critically interpret the insights generated, to question the underlying assumptions, and to use that essential human judgment to guide the organization's future in an ever-changing landscape. How will you hone your quantitative intuition and leadership in a world increasingly driven by algorithms?